a podcast about the game of life and the hero's journey we all experience. Let's jump in with our host, Dylan Watkins, as he introduces today's guest.
Are you curious in investments in this current climate and conditions? Well, on today's podcast, I have Charles Hudson. He is a managing partner and founder of Precursor Ventures, an early-stage venture capital firm focused on investing in the first institutional round of investments for the most promising software and hardware companies. Under his leadership, Precursor Ventures has raised 4 funds and has over 175 million under management, and he has invested in 250 companies and supported more than 400 founders, including the teams behind Clearco, Juniper Square, The Athletic, Incredible Health, Carrot, and Pair Eyewear. Without any further delay, I'd like to welcome Charles.
Hey,
I'm excited, man. I'm excited to have you on, and yeah, I'm really looking forward to rapping with you. How you doing?
Me too.
Yeah.
I'm doing great. Yeah.
Here. Where you currently based out of right now?
I am in San Francisco. I'm actually, like you can see, well, maybe not so much in the background, but I'm in our office here in the city.
Oh,
it's been great.
Nice. Have you noticed that there is some sort of competitive advantage to being an investor inside San Francisco?
I still think there's a lot of local network effects for being here. On my street, I bump into other investors, founders. I feel like it's hard to beat the information flow that happens here. I tell everyone, like, you can make a movie anywhere. It happens to be a lot easier in New York or LA. And I think there's certain businesses that have geographic density. And I still think the Bay Area is the most dense place to be if you want to do tech investing or build a startup of your own. Not a requirement, but like obvious benefits to me.
It's helpful. Yeah.
Mm-hmm.
Yeah. Do you have a story at all by any chance of any what do you say synchronicities happening because you are in San Francisco?
Oh, so many. I'll just tell you one that happened yesterday. Yesterday, I was going to a meeting down the street from my office. I stopped to grab a cup of coffee, and I bumped into somebody that I know from 3 startups ago, who I hadn't seen in forever, who happened to be meeting another friend of mine. I didn't even realize still that the 2 of them were friends. And this person was starting a new company and was like, oh, I've been meaning to reach out to you about this new startup. I was going to email you, but like, since you're here, do you have 5 minutes? I can give you like the quick version. I was like, well, I have something else to go to in like exactly 5 minutes. So like, let's get the quick version out. And who knows how long it would have taken him to eventually get around to emailing me and then for me to find a time to meet with them. And so it's that kind of, that happened yesterday. It's just those kind of things that happen.
It's that ecosystem of people doing, especially things you're interested in, which is this tech investment startup stuff.
Yeah.
Yeah, it was funny. I was looking at, I'm sure you're familiar with ChatGPT.
Of course.
And I went to go look at Google Trends. And so Google Trends shows where things spike in terms of keywords. And then it showed first like Washington was really big for ChatGPT, and then California, and then you go to San Francisco, it was at like 100%.
Oh man, I'm not surprised.
Yeah. What's your hot take on that?
I think the technology is really interesting. I think it has the potential to have a gigantic impact. When I look at it, though, I keep asking myself, who do I think is going to capture the value in this innovation? And right now, if you ask me, I would say it seems like OpenAI and Midjourney and a handful of companies are going to capture a lot of the value in generative AI. The reason I haven't made a bunch of investments on the startup side is I have 2 note-taking tools that I use, Notion and Mem, both of which already have an embedded AI smart writer. Mm-hmm. And I'm just like, well, if this becomes the capability that's embedded in lots of other applications, can you really build big applications around the application of this technology if it's something that everybody can use? And so I think in the same way with Web3, we just said, let's come up with our own point of view about this and like meet some companies and try to figure out what makes sense to us before we deploy capital. I'm kind of taking the same approach here. I mean, it's clear to me that what OpenAI is doing is really working, and they're a leader. And I'm not sure what other surface area there is that's available to startups.
Got it. So the point is, it's going to be so ubiquitous so quickly that if anybody can do it and it's going to be as common as Google, then where's the real competitive advantage for a startup to really come into the space and capitalize? That kind of comes around the concept of like, what's the moat? Is that
Mm,
what you're saying?
yeah, and I think like we make a lot of investments where, ironically, the moat only becomes well understood after the fact.
Hmm.
I think with this whole moat conversation, I think everybody wants it to be some neat and tidy network effects or technical differentiation. We have a bunch of companies where the moat is like, this is just a very hard business to run at scale. And there's like 100 little processes that you have to get right in order to deliver an amazing customer experience. And the only way to figure those things out is by doing. So sometimes I'm like, oh, the moat is that this is an operationally complex and difficult business to pull off. And like, once you get to the point of being able to pull it off, it's only because you've mastered so many little things along the way.
Got it. Yeah. So then so is that not one of the things that you look for? I know you have, I believe there's like 6 core pieces of your investment form of what you look for. When you're doing that, when you're making this kind of internal decision-making processes and you go to meet a startup or someone that might be looking for capital, you're considering to invest, what are the things that are running through your head that you're ticking off?
I think the big thing I'm trying to figure out is like, is this a business that I think has good long-term potential? And sometimes I meet companies and I'm like, wow, this feels like they're exploiting a moment in time. People are like, oh, is it a feature or is it a company? I'm like, I don't know. There are lots of things that I thought were a feature that turned out to be a whole company. A lot of people said Instagram was just filters. It turned out it was actually a lot more than filters in the end. But I always ask myself, like, does this person have a plan for building an enduring company? And do I agree with that plan? A lot of times they say, like, I don't think this person has a plan for building an enduring company, or I think the innovation that they're pioneering, it feels like it's transient. And like, once everyone catches up, then what? And then I'm looking for founders. I think there's this like blend of being like ambitious enough to think you succeed and being naive enough to not realize like how brutal it is to do startups. And so you need some combination. Not every founder we back has those two things in the same balance, but I believe you need a healthy dose of both.
Yeah, it's almost like you have to believe that the tunnel, going through the tunnel, that it's only 3 feet deep, and you got to go in with the enthusiasm of that. And then find that sustainability to keep going. Just know there's a light at the end of the tunnel. I'm going to keep going.
It's true. No, it's really true. And we've been consistently pleasantly surprised by the tenacity of the people we've backed and their ability to find the big opportunity.
How has that worked in terms of when you're investing? There's a relationship that you now form because you have a financial investment into them. And what is your thesis or your understanding with working with founders? Because it's not rarely a straight line. What do you do? Is it coaching? Is it guidance? Do you just kind of let them run into the darkness, or what does that relationship look like?
I think the way I think about it is there are a couple of principles we have. One is that we invest in adults who are capable people. Like they're not children, like they're adults. They're fully formed humans. They can figure these things out. And our job is to give them leverage in areas where we maybe know more than they do, which is usually fundraising, or there's some situations I've seen them 100 times, founders never seen them before. I think the other principle is like, I think our job is to be guardrails. What I mean by that is like most of the decisions that a founder needs to make, they need to own them and make them themselves. If they want our input and consultation, great, but they're the owner, and we should like challenge them and support them in making a good decision. But ultimately, it's their decision. But there's a few things, if you do them, you might kill the company, and that's where I think we need to be guardrails. And that's usually like a dramatic pivot. We should probably talk before you decide to make a dramatic pivot. We'll probably support you in doing so, but those are one of those things that can blow a hole in the company. Really expensive, big hires, co-founder splits, things that might be illegal that founders don't realize are illegal. Like there's a handful of things where I think our job is to be guardrails. But honestly, we invest in people, a lot of whom are doing it for the first time as CEO. And my belief is that being CEO and founder is a unique job. Nothing fully prepares you for it than doing it. And it's better to let people figure it out than to do everything for them. It's like our view is kind of like, if the person can't hire, we have to help them figure out how to hire, because they're going to be hiring people for the rest of the company for for as long as it lives. And so like us just like parachuting in and doing it for you, it doesn't allow you to grow. So I think personal, this may be a little woo-woo, but I think starting a company, it's a big personal growth journey for a lot of people. And I think you have to go on that journey, and like we're here to support you as a partner, but like sometimes you'll feel like you're walking alone, but we're watching. And in other cases, it'll feel like we're walking right next to you.
That's beautiful. Yeah. I heard a saying one time, it was a previous podcast guest who said, your business is like a microcosm of your nervous system. Like your business can only grow as much as you do and as much as you allow. And so understanding is there ways that you've seen startup founders take some sort of transformational shifts or looking inwards where they've needed to shift who they are? And do you have anything that you can say around that?
I mean, we have a somewhat similar saying, which is I tell people all the time, like your startup will amplify all the idiosyncrasies about your personality and who you are. So I say in many cases, if you see a problem in your startup, it's probably a problem you have in your own life. They are this big sort of like mirror. So I tell people all the time, like the better you understand yourself and your own tendencies and your beliefs, the better you will understand how those things manifest themselves in your startup. And so for a lot of our startup founders, they end up at some point working with a coach or some kind of advisor to help them. And some of them have a coach and a therapist, because I think they're really two different skill sets. But I think to your point, a lot of what you have to do in a startup is you have to constantly do things you've never done before. And you have to do them very well with little practice. So you've never raised a seed round before. Well, if you want your company to get funded, you have to go figure out how to raise a seed round. Great, you raised a seed round. Now we have to go raise a Series A. You never raised a Series A before, but you've raised some money. Oh, but a Series A is different. Well, now you have to go figure out how to raise a Series A. Hiring, firing, strategy shifts, all of these things are oftentimes new for founders. And so what I tell them is it's helpful, A, to have like a sounding board for you personally, but B, it's also good to have friends who are founders who've gone on this journey before, who are maybe 1 or 2 steps ahead of you, not because you should do exactly what they did or because your journey will be exactly the same, but those people understand the context that you operate in. And we work with a lot of first-time founders who come back to me and say, well, I told my parents what I do and they don't get it. And I told my friend who works at Google, he doesn't get it. I'm like, of course not. Those people don't understand the context of your life. You need founder friends.
Yeah.
You need a founder community. And part of what we try to provide for our portfolio companies is a true founder community that they can plug into, where they can have real, deep, meaningful, open conversations with people who are going through the same things that they are.
That's beautiful. I like the community aspect of having a couple pieces. You have these founder friends that are getting together where they share some sort of local kombuchas together and talk about life. And then you talked about the difference between I don't want to say you have this parental role, but your goal is kind of let them be wild, but don't let them kill themselves.
Yeah.
Which is kind of a good parental kind of role. And then you said there's a difference between a therapist and a coach that would help them along the way. What areas, how did each one of them in different ways support the founder?
Yeah, look, I think, first of all, being a founder of a tech company is an incredibly stressful job. I found sometimes the things you have to do as a founder create mental health challenges. And like having somebody who's skilled, I am not like an MFT. I'm not a trained or licensed therapist in any way, shape, or form. Having someone who's professionally trained who can help you think through these issues is important. Also, I find sometimes people have unresolved issues. I'll give you a really good example, Dylan. I have learned a lot of founders that we've worked with have unresolved issues about their relationship to money in their personal life. And those things manifest themselves in the way that they operate their startup and when they think about budgeting and spending. And sometimes I'm like, hey, I think you have like a money issue from your personal life that is like showing up in the startup, and you should explore that. To me, that is the domain of therapy and like understanding yourself and just becoming more self-aware. Coaching, I think about, is more about managerial effectiveness. And, I find self-aware people tend to make better managers on average. They're just more in tune with who they are. They're more in tune with their impact on others. They're more in tune with how their actions are received by others, how people are feeling. You can teach people a lot of that, I think. I think the coaching thing is about, hey, you're leading a group of 20 people. How do you need to communicate? Or how do you need to make decisions? Or how do you need to find when to delegate, when to take control. Those to me are like managerial effectiveness things, where I think I can actually help people with some of those things because we deal with a lot of managerial situations at Precursor. So some people have both, some people have only one. But I think it's really hard to do a startup truly by yourself without a support ecosystem of some sort.
Sure, absolutely. Yeah. So it sounds like from the therapist point of view, the therapist helps with the trauma and self needs and internal reflections, while the coach is more external action taking, social connections, collaborations, team communities, that kind of stuff.
Yeah.
Yeah. It's interesting. Yeah. That's beautiful. For yourself, how has, like, could you walk me through a bit of your journey from starting out that brought you into the tech space and kind of how you've evolved along the way?
Oh man. I'll try not to make it too long, but I mean, like I went to school at Stanford. I did not study computer science. I think I took one kind of computer science class. I was an econ and Spanish major. I was pretty sure I wanted to go into the world of business. I didn't know anything about tech. I'm from Michigan originally. Like tech was not a big part of like my upbringing, with one exception. One of the most prominent alums from my high school was one of the founders of Sun Microsystems. So we had a computer science lab. We had programming classes when I was in high school. I just didn't think of that was a career. I'm like, this is a class you take just like English or music or math. You take a computer class. And I got to Stanford and I'm like, oh, these people are really into this technology thing. Like this, it's a big deal. And I graduated right into the tail end of Web 1.0. And the economist in me said, wow, the internet seems to be very good at reducing communication and transaction costs between parties. And this could be maybe like the steam engine railroad type innovation of my lifetime. And as excited as I am to be an investment banker or a management consultant, I think I'm going to bet on this internet thing. And so I worked for the CIA's venture capital group, which ended up finding that job through another internship I had where I met somebody who knew them. So I did that for a few years. It was really fun. Then went back to
the CIA, that sounds like there's some interesting investments in that space.
It was the CIA had all of the same technology challenges of any very large distributed organization. Yeah. So I feel honored that they trusted us to help them address some of their technology challenges and opportunities, but it was really fun job. And then I realized like 3.5 years as a junior VC, I knew a little bit about a lot of things, but I didn't actually know how to do anything. And if you dropped me into a company, there was like probably no job that would have been appropriate to take. So I said, all right, I'm going to go try my hand at business school and see if I can come out of business school with a clearer idea of what I want to do. And came out and worked as a product manager for 6 months and realized this is a very hard job. I respect people who are great at it. I don't think this is what I'm meant to do. And then I ended up at Google for about 1.5 years doing kind of partnerships and business development work. That felt more natural to me. And then I said, I really want to try startups. I haven't done this. I mean, the first company I went to out of business school was like a 250 person company. I would describe it as a reasonably mature private company, not really a startup per se. And so I went to this startup online virtual worlds company that was really small. I was part of a 2-person sales and BD team. And I was like, startups are my thing. I'm in the right role at the right stage company. This is where I want to be. And then did a couple startups in the games space.
Yeah. What about startups make it the right fit for you?
I just loved the freedom. And I loved the fact that I could go to my CEO in the morning with an idea, and there was a chance by the end of the day, like we might have like built something or launched something.
Yeah.
And I just loved the like freedom and like the autonomy. And I didn't find the risk. I never felt like startups were risky. I'm like, they're kind of risky, but like we have all the control as the team. Like we can make it happen and we can like remove the things that make this company risky. And so that was like a really awesome experience. And like, I loved my time at Google, but I was like, wow, there's so many smart people here at Google. Like, I don't know that I'm like any smarter than they are. And so I felt like though at startups, there was just more room to run. And I was just really, 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 really happy with the opportunity to do that. It meant so much to me to feel like trusted by people, to solve problems. They're like, you have to solve it. Like, we don't actually know the answer. This is not some like Socratic exercise. Like, you actually have to figure it out. And I love that about startup life.
Got it. And then so you went from the startup life into the game space, and that felt even better. You're like, okay, this is even more so.
And I was working in games at a time when the games business was going through a pretty big transition. It was when free-to-play games were really starting to happen in the United States, and like they weren't well understood in the US, but they were super well understood in Asia. And so that made for like some really interesting like learning opportunities. And I don't know, I just have always felt like I wanted to be where the innovation was happening, where the action was.
Where do you feel like it's currently happening now these days?
It's a really good question. I think there's a lot of innovation that's happening internationally. As I think some of the technology innovations in the United States are being exported to other countries, but being implemented in new ways. And it's cool to me to see entrepreneurship in technology just blossoming in Latin America and in Africa in particular. I think there was and still is a lot of energy and enthusiasm around crypto and Web3. I just think without this speculative financial piece, it feels like the energy is different. But for the people I know who are true believers, they're as committed as ever. And I think that generative AI, ChatGPT, Mid-Journey stuff is also interesting. I think it's one of those things where you're just like, wow, like you play with ChatGPT, you're like, is this the future of search? Is this the future of writing? Could be, maybe not. Who knows? But I think there's a lot of energy there because, I think open questions attract energy. And those are areas where I think it feels like there's energy and the opportunity to build something new.
Yeah. Yeah, it makes sense. And also that kind of reminds me of the gaming term I learned from Amy Jo Kim, because I think we met part of going through her design course. I think she called it little in, big out.
Yep.
In terms of gaming terminology. So you type in, write me a thesis, and then out pops it. And so it's like hitting the tip of the domino, right? And the whole thing falls down around you. And I feel it's one of the gamification feels that I get when I play with ChatGPT.
It's pretty, I use it a lot to get my creative. And like, I don't really publish the stuff that it produces, but I find sometimes I'm like a little stuck and I'm like, okay, I have to write this thing. And I find that like it will get me going. I'm like, okay, like, all right, here's 4 or 5 treatments that they generated. Okay, I've got some ideas about what I want to write now that I've seen what the machine has produced. I'm not going to reuse any of this output, but it's sort of helped my brain get started.
I could see that. And it wasn't until I started playing with it myself that I realized how much AI I actually use on like a day-to-day of I was like, speaking into my phone to translate some things, and I'd type that in, and then I'd drag everything in the Descript, and then I'd video edit things around and then output that. And I was just like there's a lot of these little micro slices of AI that, it's not necessarily general, but I feel like you're starting to stitch them all together and it starts to be something that's a greater sum of the parts. Have you seen things where people have stacked these types of technologies together in a way that is unique and valuable?
Oh, I've got a couple friends in venture who've done some really clever stuff with Zapier plus Gmail plus OpenAPI plus their CRM systems, and they've stitched it together to do some really cool. I'm honestly jealous, like some really cool automations. For their workflow, and that's where I'm like particularly interested in seeing how does this stuff. So we've been investing in AI, what I call applied AI companies, for the last 5 years, which is like, I'm not smart enough to evaluate an AI model or someone who's building like tooling, but I'm like, hey, if you can find an application, like we have an investment in a company called Rad AI that helps radiologists be more efficient and effective with the outputs of their radiology readings, not trying to replace radiologists, trying to make them more effective. And I was like, oh, this makes sense to me. This is like a clear application where using AI can really, really help.
Yeah.
So I'm on the lookout for companies like that.
Yeah, especially in areas of med tech. There's always, huge opportunities. I know anytime you do things that are, I know with virtual reality, because I have more experience in that space as well, it's anything that's rare, risky, dangerous, difficult, which is everything medical,
Yes.
has huge opportunities. So I can absolutely see that. And so it's actually turning science into applied science. How can you take this technology and turn it into something that's a useful product? Because sometimes people look at my cool widget, but there's no actual use case for it.
Yeah.
Do you have a litmus test to kind of figure out whether or not this thing is valid or not valid for a certain market space?
So we don't do a lot of, I think if it requires a deep understanding of science, I just assume I'm not smart enough to really evaluate it. So like we take those off the table.
Yeah.
And then there's other things. Like I'll give you like a more practical example.
Sure.
We met a bunch of like self-driving truck and car companies earlier in Precursor. And I was like, I badly want these things to exist, but I think we're being too optimistic on the timetable. And time is not the friend of most startups. So we ended up not investing in a bunch of those companies, really because I felt like the more we learned, the more I felt like, well, the real dream scenario is probably farther off than we think. And it's unclear to me if the intermediate endpoints are that interesting. And I was like, gosh, I really want a self-driving car, and I really want self-driving trucks on the freeway. But me wanting it has no bearing on how long it's going to take technically to happen. We just felt like the timetable we think it's going to take is much longer than the optimists are saying. And so we really set that market out, and with the benefit of hindsight, I'm glad we did. On the way up, it didn't feel great watching these companies raise all this money, and I was like, ugh, maybe we made a huge mistake. And same thing with Web3. There are a bunch of things about Web3. I'm like, these things don't make sense to me yet. Once they begin to make sense to me, we will be more aggressive in investing. Until then, we'll let other people make that money. And again, I'm glad we waited until things made sense for us to jump in.
Yeah, it seems to be this combination of mitigating the risk, creating that psychological safety to jump forward and understand enough, but then also enough to, but also saying there's going to be a gap here in what currently is versus what can be, and how short is that gap? What does that really look like?
And because we're mostly a pre-seed investor, for us, the timing really does matter. We don't have an infinite window. I'm like, I kind of need the market dynamics have to come together in sort of 2 to 3 years for people in most cases to be able to commercialize whatever it is that they're building. And if it doesn't happen in that time frame, company might not be around to take advantage of the innovation.
Yeah. Could you just, for anybody that's listening, explain what you mean by pre-seed and what that looks like?
Sure. We take a pretty specific view. So for us, a pre-seed round is, for our own internal purposes, other people have different definitions. It's a round of $1 million or less for a company that is somewhere between no product market fit and very, very early glimmers of product market fit, and usually little to no traction. So think we're basically investing kind of at idea stage companies. And the reason we think the $1 million is an important threshold is, to me, a pre-seed round is about finding product market fit and building something. It's not about building a company. A seed round's about like, hey, we've got a nugget of an idea that's working here. Can we now scale this idea into a company? We've got to hire some people and put more structure in place. That's something you do with a seed round. For me, pre-seed is really about concept idea validation.
Okay. That makes sense. And that also makes sense why I immediately think of Amy Jo Kim and validating ideas and making sure things land well, and, designing on paper versus expensive designs. I build high-end technology, so I build virtual and I do some AI work, but validating an idea on a piece of paper is so much more cost-effective than building an entire application out and then testing the marketplace not to have it land and then go, oh, okay, well, that was an expensive lesson. Go back to the drawing board.
And we have those. We have some of those, Dylan. We have some people where I'm just sort of like, hey, I always ask people, what do you think the MVP for this product looks like? Like, what is the skinniest but useful version of this product we could build and test things out? And sometimes I tell people there's too much M in the MVP. Like, it's got to be representative of what we're building. And in other cases, I'm just like, look, there's a really simple, hacky way to get to an answer here. So
it's a balance. And then what's the the desire to work with such an early stage versus more guarantees, more certainty? What's that about?
I think part of being an investor is figuring out how your own brain works and like what gets you excited. I have a bunch of friends who do growth stage investments and they spend all day in Excel and they love it. They love looking at financial models. They love sensitivity analysis. They love all, and I'm like, I do not love those things. And I'm glad we have people who do. What I realized is like my basic belief is that most of the companies I found that were interesting as an investor were interesting pre-traction, pre-product market fit. Like I didn't feel the need to see more. So I'm like, well, if I'm comfortable picking companies at that stage and we've had some success in doing so, why shouldn't I just continue to do that? And it turns out it's a relatively, in the world of institutional venture capital, there aren't that many people who either want to or enjoy picking companies at the stage where we do, but I really like it. And I think part of being a successful investor is finding a lane where you're happy, but where you also can win.
Yeah.
It's like, I don't want to compete against my spreadsheet friends. Like they're better at spreadsheets than I am and they enjoy them more. I'm like, but the underwriting people and doing all that work from scratch, that part I really enjoy. I like doing that. So maybe I should just do that. So sometimes, kind of, you do this job long enough and you start to really realize what you like.
Yeah. And so for you, it's that early stage, 1 or 2 founders, that freedom. Is it, and when you talk about what you like about it, is there an excitement issue? Is it going into the unknown, or what is it? What do you get from working with those early stage founders?
It's a very, very awesome and like thoughtful question. I think what I've realized is, and I think this is something I went through as a first-time founder, I think the market for venture is like so heavily skewed towards repeat people or people that are like de-risked that we've sort of lost our way in funding people that don't fit that pattern. And I think what I realized as a founder myself was like, well, lots of people could be a good founder if they were given the chance. Just very few people get the opportunity. I also realized like some of the best founders I'd invested in my old firm at Uncork, they weren't like 2 degrees from Stanford, 4 years at Google, YC grads. They were just really smart people who'd really thought about the problem they were trying to solve. And it turned out when you put them in a situation where they had to recruit and hire people and had to set strategy, like they grew into it and they really took to the work. And I was like, the thing I like about the early stage is like most of the people we bet on, maybe even their old manager didn't think they would be a founder, or like maybe no one's ever told or encouraged them to go in this direction. And I meet them and I'm like, oh, this person totally has the it that we're looking for. They just need the opportunity and they need the circumstances that will pull those things out of them. And so I like it just more from like a human development, human capital. Like I think it's fun to see people achieve things. And like, I don't know, I'm done building companies myself. So like I enjoy vicariously like watching these people that we meet them. And I always tease them like, do you remember how bad you were at this thing when we first, oh God, I was terrible at product strategy when you met me. Like we couldn't even ship a product. And now they're like a highly regarded product person or a CEO who really like leans into the job and becomes great. I don't know. I find it very rewarding to be a small part of those people's professional journeys.
That celebration along the way. It's almost like it sounds like to me a bit of investment activism, supporting people along the way and then celebrating that. Do you have a moment in time, any things that you can reflect on that you've been able to, bet on an uncommon person and then they've been able to succeed in that celebration moment?
Oh, we've got tons of them. I mean, like, I don't know. I would say like I'm really proud of the guys at The Athletic. I mean, like Adam and Alex did a great job building and scaling that business. And they raised money at a time where most people thought like you couldn't do anything interesting in journalism. And I was like, I disagree. And they just, I mean, they built what I think is probably the most prominent, until the New York Times acquired, the most prominent independent sports media platform in the country. And will soon be the world someday. And so I don't know, like they're just two really smart guys with a great idea, and they built a great team around them. I've got others that are like approaching big milestones. I won't jinx them by saying
call them out at a time.
But there's lots of other little milestones. You know, the person who gets their Series A done, who wasn't sure they were going to make it. The person who, you know, we've got a couple of founders who are running, you know, 150, 200 person companies. And I asked them, did you ever think you'd run a company this large? They're like, never.
Wow. What do you do when you're in conflict with a founder, someone that they want to go left and you want to go right, and this is one of those big decisions? Because I think one of the fears that some founders have is that, oh, if I take on investment or whatever, there's horror stories of getting kicked out of their own company and getting replaced and things like that. How do you handle that conflict? What does that look like?
We've been a part of removing CEOs before. It's very, very rare. I mean, if you think about the stage where we invest, who's gonna come join a company with like no money and no founder?
we're one of three.
pretty tough sell.
Yeah.
I think what I would say in general is we don't take that many board seats. So in most cases, like there's not even like a structural reason that people have to listen to us. But we'll put that aside. I think in general, venture is about influence, not control. I don't have really the illusion that I have control over what these founders will do, or I don't really have, you know, own enough of the companies that I can block decisions. Even if I could, I wouldn't want it to come to that. In general, like my job is to make the strongest, best argument I can from my point of view. And hope, and it's not hope that they listen to me, it's hope that they make the right decision. It'd be one thing if I was always right, Dylan. If I was right all the time, I would just say, just listen to me because I'm never wrong. That is like simply not true. But I do think it's my job to like make sure that founders think about all of the key points and the trade-offs and the costs of both action and inaction for a decision. As you can imagine, in Q4, you know, recently we've talked to a lot of founders just about this question of like, well, what's the right burn rate in this new economic environment? In many cases, I've had a point of view that was a number that was much lower than that founder was prepared to go. And so instead of saying like, you will get the burn rate down to X, I've been like, here's what you get by getting the burn rate down to. You get 24 months of runway. You have a simpler company to operate. You still have enough people to build stuff, but not as many as you have today. But you get the gift of time. Or you could you could lower the burn rate to a number that's higher than I'm suggesting and lower than the current. Have more people, have more punching power. But it's like my experience has been in the end, everybody always wishes they had more time. And they go, gosh, I wish we hadn't brought on that consultant. Or I wish we hadn't signed that deal. Like there's always a couple things you look back on and say, gosh, we probably could have done more with the money. And I'm just like, I don't want any of you, the founders in our portfolio, to ever have that feeling of getting close to the end and feeling like we didn't do a good job with the money. We could have done a lot more.
Yeah. It seems like the real true commodity in this world isn't money, it's time. And if you had more time, which brings back to the whole, why I think everyone's fascinated with the whole chat GPT and all that stuff, is that it's a great time saver to a degree.
Oh yeah.
TikTok, it's only 60 seconds. You just keep swiping. You might do it for 3 hours straight, but it's only 60 seconds.
That's right. That's how they get you.
The perceived value of time in this area. So, and it sounds like, and I don't know if I'm inferring this incorrectly, it sounds like a lot of things, like you don't have a desire to build, but you have a desire to celebrate. And instead of you focusing all your energy and effort on building your own one company, instead you're empowering, it sounds like 250 or so different companies along the way to be able to have all these little micro celebrations and surrounded with the energy without the actual. So it's more of like your TikTok swiping your companies.
Yeah.
And how you doing? How you doing?
Yep. We talk to them. We talk to them a lot. I probably talk to 40 to 45 of our portfolio companies a week.
Yeah.
So it's a significant chunk of my day. Wow. But I don't know how else, I tell my investors all the time, these companies are run by human beings. Yeah. So if you want to understand the company, you have to understand the human being who's running it. And the better we understand the human being, their motivations, fears, desires, hopes, dreams, shortcomings, strengths, weaknesses, the better we can advise them on how to run the company. Yeah. And also the more satisfying, my chair is being weird. The more satisfying the experience of working with them is. Like if I was just processing, if I was just getting a bunch of written updates from people and logging them in a database, it'd be kind of boring. The fun part for me is like the people. And getting to know these founders, understanding why did this one person start this company, and like what was their insight, and like why does it matter so much to them, and what are they doing that's getting in the way of them being even more successful.
That's beautiful. And you're talking about, in order to understand the company, you have to understand the individual. And with that, what's coming to mind for me is rituals. Like you say about talking to 40 to 50 of them. Like, what other rituals do you have to really create that deep-seated connection with your community?
We try to get people together in person. I've also learned that I'm like a decent but not amazing predictor of what people are going to end up being friends with each other. It's pretty easy to guess on the professional level. Oh, you're both building e-commerce marketplaces. But oftentimes they're just like, oh, like me and this person went to college together. And I'm like, I didn't even know that. Or me and this person have a passion for the same television show or the same activity. So I feel like getting our founder group together more often, it just creates more opportunities for serendipitous discovery of shared interest. We also do a fair amount of, we have this like peer mentorship program that we run, where we put founders in little groups of 6 to 8 founders for a 6-month period of time with the facilitator, which is really designed to give them a little mini network of trust.
Yeah. I could see that. You have these loose connections with all these different ones, and then you can make tighter bonds with smaller groups. And so you have the ability to, okay.
And truthfully, like they outgrow us. This is the other piece. Like, we work closely with a lot of these companies for 2, maybe 3 years. At which point they're sort of like, hey, our company's more mature. We have more resources. Like we sort of don't need you as much.
They move out of the house. Is that what they do?
It's usually, it's sad, but it's necessary to create space for new companies. But it is always a little sad when we have a founding team that we've gotten to know really well and spent a lot of time with, and that phase of the relationship comes to an end and things transition. It is sad.
As they're progressing, and so you've seen so many startups come through your space, what is the non-obvious transition that they make? What's the thing that happens that causes them to shift from being pre-seed or seed or out the door, but they don't always predict that?
Sometimes like something happens in the external environment that creates an opportunity that wasn't there before. Like we have a company that's doing some interesting work in and around, I'm using generative AI for customer support. That was doing something very different before. Same thing, we had some companies when crypto was starting to ramp that dropped what they were doing and pivoted into crypto. And for most of them, it worked out pretty well. I think the big thing though is as companies find product market fit, this happens all the time. It's like, I think we have product market fit. I'm like, I'm not sure. I don't think you do. No, I think it's working. I'm like, yeah, but you're working really hard. You're like pushing a rock up the hill. It's going up the hill. And then when they really hit it, they're like, oh my gosh, I had no idea how far away we were from product market fit when I thought we had it the first time. Now that we really have it, they're like, I'm staying up till midnight every day, just like trying to respond to orders. It's not like anxiety driven, like I'm up late at night because I don't want my startup to fail because I didn't work hard enough. They're like, no, I'm up responding to orders or dealing with customer stuff. And I think that moment when the light bulb goes on and goes, oh, we've really cracked the code here, we really found it, totally different story.
Yes. It's pushing the boulder up the hill versus running down the hill because the boulder's chasing you.
You got it.
Yeah.
You got it. Well said.
I love that. And for all of this that you've done in the space, right? You've started, I think, 4 different funds. You've done very well in the space. You're obviously not going back in the startup land. You're in this pre-seed space. What is your holy grail? Like, what is the thing? Like, why do you do all this that you do?
It's a good question. I ask myself that all the time. I don't know. I think I was put on earth to help people. And I think different people help different people in different ways. For some people, it's emotional. For some people, it's through their own work. For me, I think, I don't know, I was put here to like help people who I think deserve an opportunity get one. Not to prove a point, but just because for whatever reason, like those people, I was talking to my investors, he's like, well, how do you find these? I'm like, they just naturally are my people. Like, it's not hard for me to find them. It's not hard for me to assess them. It's not hard for me to get comfortable providing them with capital. They are really the people I think I was like put here to help. And like, we have the fortune of being able to raise money, and we basically turn around and give that money by an investment to people that we think are really talented. I don't know. Like, I can't think of anything else I'd rather do than what I do.
It's create an opportunity with this. And that's the best way that you know how, and the best way that you've been able to have an impact.
Yeah.
So with creating this opportunity, like, if the holy grail is to really provide this opportunity and help where you can help. For you, what's the dragon? Like, what's the thing that's really difficult for you to overcome that you might need to transcend who you are to get to where you want to go?
Oh, there's so many challenges. I mean, like, one of the big ones is we're a one partner firm. There is some maximum throughput. I'm always trying to push the envelope, but there is some maximum amount of throughput that our firm can handle under its current configuration. It's largely governed by me. I have not been able to replicate myself either like virtually or like by finding somebody who has my same sensibilities for investing. I hope that we have people on the team who, as they develop and mature as investors, will fill that role. But like, that's the other thing, like, this thing might not last beyond me. And that's, I think every solo founder, every solo general partner who starts a venture firm has to like ask themselves, like, am I building a forever institution, or am I building something that like may have a finite lifetime? And like, I don't know. Fortunately, I don't have to have an answer for that today, but I don't have an answer for that yet.
Mm-hmm. So it's still undecided, but it's just you in terms of what do you, if you want to scale, then it's a different beast. And we don't have, when we haven't gotten in the full cloning yet, we're working on it. I think they got the dolly with the sheep or something back in the day, but just not quite there yet.
They're working on it.
They're working on it. I actually have a friend of mine who's fairly well off, and he actually ended up cloning his dog because his dog died. He cloned a new dog. And I was just like, oh, well, that's a thing. I was like, welcome to a brand new world, everybody. I was like, so that's some love. So
wow, that is both thrilling and scary.
Absolutely, right. And so I know we're not quite there yet on these things. What on that note, what technology scares you? What technology that you see in these days coming up there is that it's either exciting or so exciting it might be frightening?
I think for a long time it was audio and video deepfakes. For a long time, I was very worried about, in a world where we already live in a pretty low trust information environment, like what those tools could do to an already like eroded level of trust in society. Like those are scary. It's probably the thing that has scared me the most in the last few years. I think the other thing I'd probably just say is like black box AI being allowed to sort of run around unsupervised and make decisions where people don't understand what's really happening in the black box. I'm pretty sure like that's already happening. We just don't know it yet. And I think the temptation to sort of let the algos make a bunch of these decisions, whether it's around credit reporting or who you choose for a job, if the decision-making criteria for the algorithm aren't well understood, we're going to end up replicating a lot of the problems we have in society, but turbocharging them by allowing us to make a lot of really unfair or ill-informed decisions at scale, as opposed to making a lot of ill-informed decisions slowly or at human speed.
Yeah, it's man, the human in the loop, right? That's the thing, is especially when it comes to, say, radiology or driving cars or any situation where it's great to save time, but at what point is it irresponsible to give up control to save time? We could help so many more people, but it would be way worse. It's that whole thought experiment that there's a train coming down the tracks. It's going to murder 5 people this way. Or I got to flip a switch, but you have to take the action. I feel like that's kind of the thing with the AI, what we're looking at is like, well, it's going to save so much time, but I don't have to do anything. Or, you have to.
These are thorny questions.
They are. They really are, and we don't have the answer. I mean, we could ask ChatGPT, but it's. Oh man, it's an exciting time to be a part of this stuff, and I feel like you are at the tip of the hipster spear in San Francisco. Really seeing these things coming out at full tilt, which is truly impressive. Is there, this is an awesome podcast, and by the way, thank you so much. I had to delay the meeting, and I was just like to say he is very, very kind and gracious because of this. So I want to acknowledge that. It was super cool about it. And so thank you so much for that. I really do appreciate you being flexible with that. And now I'd like to say, is there anything else you'd like to let people know about before you tell them how to get a hold of you?
I will just say this. We try very hard to be an open access firm. So if you're interested in chatting with us at Precursor, you don't need to manufacture an intro through someone else. You can just like come direct to the front door. That's like a really important like operating principle for us.
Beautiful. Yeah. So if you have an awesome idea, MVP of some kind, to reach out to Precursor. And and with that being said, how do they get a hold of you? What does that look like if they do want to reach out?
Oh, you can just come to our website. It's just precursorvc.com. I'm just unimaginatively Charles@precursorvc.com, not the world's hardest email address to guess. Those are probably the best two ways.
Beautiful. All right, Charles, thank you so much. I really appreciate your time coming on the show. It's been an absolute honor and pleasure, and I wish you all the best growing your pre-seed community into flourishing into beautiful companies.
Well, thank you for having us. This was really a pleasure.
Yeah, thank you so much. Have a beautiful day. Take care.
You too.
Okay, bye now.
Bye.
Thank you for listening to the Heroes of Reality podcast. Check out heroesofreality.com for more episodes. While you're there, you can also take the Heroes Quiz to find out what kind of hero you are. Or, if you have a great story and want to be on the podcast, tell us why your hero's journey will inspire others. Thank you for listening. See you